Hello, everyone, and welcome to another episode of A Cup of Coffee in the Neighborhood with Jennifer Richardson and Mark Arrington. So today we want to talk about what it's like moving and living in a new construction neighborhood and what happens when you move into a new construction neighborhood and they talk about amenities and those amenities might not be there. And then Jen's going to kind of talk about, what is it like actually dealing with builders, and then I'll get into a little bit of the new construction loan process stuff. So obviously we're living in Scotts Hill Village, which is a Mongo neighborhood. Mongo makes a fantastic home. I feel blessed to have a Mongo home, but we still don't have a pool.
We don't have a pool. So so what does that look like? So typically, Mark, when I'm meeting with buyers and they we're having these conversations about what's important to them out of their house, but a big part of that is what is important to you from your neighborhood also, because some people say, I don't want an HOA, I want to be able to do what I want, put some goats in the backyard, knock yourself out.
And then I wanted an HOA.
I am grateful for the HOA.
Yeah.
I didn't think I was going to be, but it's definitely, comes with pros and cons, mostly pros in my opinion. They keep the neighborhood looking good and keep things maintained, and typically people act right. And so that's great. But, something that comes along with those HOA dues are the amenities. And it's very important I know it was important for you guys. You said, hey, we want to pool in our neighborhood. Yes. We want to turn the kids loose, like go swimming, get all that energy out, whatever. We don't currently have that right now.
No, we don't. And I actually, being just from my background, USMC, you signed the expletive contract. I want to see it in writing. Mm-hmm. And we actually had the agent on duty at the time that was working for Mongo send us an email so that we had it in writing that there was actually going to be a pool. And we've been living over here for about a year now, and there's still no pool. And this neighborhood's been established now for 3 years. Mm-hmm. So perhaps there's a little bit of buyer be warned when you kind of move into a neighborhood and there's not a pool established already and those amenities are not already there.
Yeah.
I know a lot of neighborhoods nowadays, like the amenities are one of the first things that go up.
Mm-hmm. That's typically what I see, and I mean, we've got some down the road that are developing, and they've already broken ground on their pool. So, I mean, it's one of those things that's important. And I see different builders managing this different ways, and I think that it's important to note too that sometimes it's not just the builder, it's typically the developer. But I would
all
say
contractual.
Do your research when you're moving into a neighborhood. If something is promised to you, whether it's swimming pool, tennis courts, whatever it might be, do your research. And unfortunately, I think that we're bearing the brunt of this now, knowing it's been promised, and presumably the funds are earmarked and put into an escrow account. Yes. And so it seems like things are moving in the right direction, but I mean, we've been here for less than a year, but
there's people that have been here for 3 years.
They've been here for 3 years.
It's been steadily talked about.
Paying dues. Children have learned to swim elsewhere. Yes. And that was something that was important to them. So, I mean, that's someone that, we personally know too, that they've expressed that concern. So it's very important to make sure that things are in writing, make sure that there is a plan in place that is, moving those amenities and promise things along. I think that that's huge. And, ideally jump in somewhere where it's already got one too, where it's already established and you can see it and it's operational.
It's there. And now I know what it is. I know the value in it as well, because,
sure.
And you can probably talk to this more than I can, but a neighborhood that has a pool, it's going to have a higher value than a neighborhood that does not have a pool, I would assume.
Yeah. So it depends on your appraiser, of course, and how they view that. But when I'm advising clients and looking at pricing strategy, those amenities are always going to be something that is, in my opinion, when I'm talking to my clients, like, hey, this is great resale value. You seem to be getting a bigger bang for your buck. Something else that just came to mind too that's also very important is just because you see it and it's there doesn't mean that it's being maintained properly or that there are funds allotted or in place to take care of it. I have seen certain neighborhoods in Wilmington have special assessments that were imposed to reline a pool or replace equipment or something like that, and these commercial pools are really expensive, so it can be several $100s up to several thousand.
Yeah, and if your budget's strapped, that might if you're already at the high level of your debt to income ratio with your housing ratio and everything else, that could be problematic.
sure.
I don't know. I would just always go with the adage: the only thing better than having a pool is having a pool that you don't have to maintain.
That's true. Yep.
So, I'd rather have a pool. It was a big thing to me when I moved into this neighborhood that there was going to be a pool. And I don't want to feel like I was like shorted, but at the same time, like there's still no pool.
I know.
You know what I mean? And I was just like, and I even had like the realtor at the time be like, put in writing, but obviously they put it in writing, but then you also have to start thinking about who actually has the authority on the fact to put things in writing and how much does that actually mean. So it's cool. I got an email. That person doesn't even work here anymore.
Exactly.
And, Mongo's like, I didn't authorize that. So whatever, you know what I mean?
Yeah.
So yeah, buyer be warned to an extent. And, a lot of these builders that are going in, that's why I think that they're probably putting in the pools right off the bat.
Yeah. I've seen a couple going in the neighborhood. I don't know if you've seen those, but people are
people are already doing their own pool
walking
thing.
down there. They're like, I'll build it myself.
Yeah.
So we got to make friends with those people, by the way.
Yes, we do. Yes,
Anyway, so
hopefully they make good
You had
drinks.
something about a job.
Yeah, so the job report came out on Friday and it was at 300,000. So I think they were expecting it to be around 200,000 and it came out at 300,000, which is
What does
good.
that mean?
So pretty much it means that the economy is strong.
Okay.
Right? So if we're still adding like jobs to the coffers of our economy, it means that our economy is withstanding this, possible recession that we're kind of already in. There was also a big bank in the West Coast, the Silicon Valley's bank, that went under, which obviously the second a bank goes under, people start really freaking out. But, the administration essentially came out and said, the Biden administration came out and said pretty much that, hey, like we're going to end up backing those accounts regardless. So like the people that put their money into a bank, like you're going to get your money back out, which is, pretty cool of them because usually the FDIC only insures it up to a certain amount. And obviously this was Silicon Valley.
That those deposits were much higher.
Yeah, they probably had a pretty good amount of money in there. But, let's not go straight up,
Sure.
Great Depression. Everybody's running to the bank for
Right.
their 2 pennies. But, with that, I think the market is definitely kind of taking a little bit of a downturn today. But it's kind of weird because when the market takes a downturn, interest rates go down on mortgages.
Sweet.
So it's really weird. So you're like, oh wait, sweet. Like so the
great.
market's gone down. So but interest rates go down for mortgages. So it's kind of a double-edged sword. But a strong unemployment report helped. And then obviously anytime that there's a market downturn, to an extent it can help mortgage rates. So we've seen, the 10-year today, at least last time I looked at it, was down, and that's what you want it. You want the 10-year to be down.
Okay.
And if the 10-year goes down, that means that mortgage-backed securities are less expensive for the consumer.
Gotcha.
So
Cool.
it's just it's really,
That's
economics is, to me, it's a guessing game based on kind of data.
And I mean, it's fun to keep up with too, because I see a few indicators that are, more like bigger picture, I guess, indicators or whatever. But what I'm seeing are a continued extended days on market.
Yep.
Sales are down as a whole, but so is inventory. So that makes sense. But then I'm starting to see, sales price to list price go a little bit down. So
Yeah.
I mean, it depends on the property, of course. And I say, always the best properties are going to continue to get multiple offers right now, and continue to sell at or above list. But we're starting to see quite a few that are sitting there, and so it might be a great time to buy. Definitely a good time to sell, though.
Yeah. You still think it's a good time to sell?
Absolutely, yeah. I mean, if you price right, it's going to get done. So.
And another thing that people don't necessarily always look at is the amount of equity that's in their home right now. And there's a lot of things that you can do with that equity.
Yeah.
Now, obviously, everybody would like to pay off their homes or whatever else, and if that's their prerogative, then go for it. You know what I mean? Like, it's obviously going to be better to own your home outright and not have a loan on it. But at the end of the day, if you do have a loan on it, there's definitely ways that you can pull out some of that equity in order to use it in different ways. For instance, one of the things that we have a lot of in coastal Carolina is condo hotels and unwarrantable condos. So with these condo hotels and these unwarrantable condos, you can't just get a standard loan on them, right? There's some people that will offer a adjustable rate mortgage on them that's pretty short in duration. There's some banks that will lend to them depending on what's that bank's risk tolerance. But at the end of the day, for the most part, you end up having a bunch of cash buyers for those places. But if you have something called a home equity line of credit, because you have enough equity in your home that you can pull out enough, you can then go buy a condo and you can go buy an investment property.
You're effectively one of those cash buyers.
You're a cash buyer at that point because you just pulled out your home equity line of credit from your house, and it's usually at not a bad interest rate, and then it's a lower payment, and then you can just buy an investment property pretty quickly.
I dig it.
Yeah. And I mean, it's verifiable funds. So as far as like us and mortgages or whatever else goes, even if you wanted to use a HELOC for a future mortgage or something else like that, it's verifiable funds. So it's pretty easy to do.
Nice. How long do those typically take to, let's say that I gotta go get, my home equity.
They're pretty fast. They're like
what is
14 days.
Yeah, that's awesome.
They're pretty fast. So, I mean,
Cool.
depending on if it's an automatic approval or whatever else, but they're pretty fast.
Sweet.
So it doesn't take a long time. So, but yeah, I mean, obviously you got to have the equity in your home. So if you've owned your home for a couple of years, then, now might be a great time to actually pull out some of that equity if you have future needs for it. And then a lot of people are also pulling out some of that equity to pay off some of the leftovers from COVID when perhaps you're unemployed, perhaps you had some credit card debt that has a high interest rate. Obviously, if that HELOC payment has a lower interest rate than all of your credit cards, then it might make sense for you. Obviously, talk to a financial advisor, do your own research and everything else, but there's always going to be times when, if you can pay a lower interest rate on monies that you can pay off a higher interest rate on, it's usually a better deal for you.
Makes sense.
Yeah.
Cool.
But so I mean, I think that wraps it up for today. I think we talked about, buyer beware when it comes to amenities and you're moving into a new construction neighborhood that doesn't have those amenities already set in. We talked about the unemployment rate and how it's actually gone up and how the economy is pretty strong and some of the factors that are affected by that. And then we also talked about, hey, if you have a lot of equity in your home due to increased prices and appraised values of your home, then you might be able to pull that out and use it to your advantage going forward. It's always a pleasure, and we hope to see you all next week.